All right, let's talk about the Indian stock market. It's been hitting some incredible new highs, right? But the real story, the interesting stuff, isn't just that the numbers are going up. There's a huge shift happening right under the surface. Today, we're going to unpack the forces that are really pulling the strings. Let's dive in.
So, you see the headlines. The indexes are climbing. But what's really moving the needle here? Is it something happening within India? Is it a global event? Or is it something else entirely? That's what we're digging into, the key drivers shaping the market as we speak.
First up, we've got to talk about a major shakeup in one of India's most important indexes. The Nifty 50 is seeing a real changing of the guard. And believe me, who's in and who's out tells you a lot about where the economy is actually going.
So here's the big news. IndusInd Bank and Hero MotoCorp are officially out of the Nifty 50. And who's taking their place? Well, we've got InterGlobe Aviation, you probably know them as IndiGo, and Max Healthcare stepping into those very prestigious spots. Now, this isn't just some small adjustment, it's a huge signal.
And that's the key takeaway, right? This reshuffle is telling a much bigger story. It's basically pointing to a massive shift in the Indian economy. We're seeing this pivot away from more traditional sectors and a huge vote of confidence in the future of aviation and healthcare.
And just as a quick refresher, the Nifty 50 isn't just some random list. It's the benchmark index. It represents the 50 biggest, most important companies in India. So getting into this club, or getting kicked out, is a really big deal.
Okay, so it's not just what's happening inside India. Let's talk about the global ripple effect, specifically how a decision made thousands of miles away in the US is giving a serious boost to India's entire tech sector.
It all started with this. The U.S. Fed Chair Jerome Powell, he just dropped a hint. That's all it was, a hint about a possible rate cut coming in September. And as you know, even a tiny whisper from the Fed can cause waves all over the world.
And boy, did it cause waves. The reaction was immediate. India's IT giants, we're talking TCS, Infosys, Wipro, they all jumped between 2 and 3% almost instantly. The market didn't even wait for confirmation, it just went for it.
So why does this happen? Well, it's pretty simple. A rate cut in the U.S. basically means there's more cash, more liquidity sloshing around the global financial system. And when that happens, investors start looking for places to put that money to work. And they're betting big on high growth areas like Indian tech.
Now, beyond the big economic trends and global news, there's this daily battle playing out. It's like a massive tug of war happening inside the market between two really powerful groups, foreign investors and domestic investors.
Just get a load of this number. Over 16,000 crore rupees. That's how much stock foreign institutional investors, or FIIs, sold off on a single day last week. I mean, that is just a mountain of selling pressure. But here's where that tug of war really comes into play. While the FIIs were dumping all those shares, guess who was on the other side? Domestic institutions, the DIIs, along with everyday retail investors. They stepped right up and bought, soaking up a huge amount of that selling. They basically held the line. Now, some analysts are looking at this and seeing something more strategic. They're calling it, and I quote, the classic trap game institutions play. The idea is that this might be a deliberate move to shake out the nervous investors before the market makes its next big move. Pretty interesting stuff.
So with all these different forces pulling and pushing, you have to wonder, where is the market actually heading? Well, our final story is about a very bullish prediction for the Nifty's next major milestone.
This optimism isn't just coming out of thin air. It's actually built on a pretty solid foundation. You've got major GST reforms in place, and then, the big one, S&P upgraded India's sovereign rating. So with that backdrop, some analysts are making a really bold call. They're saying Nifty is heading to 28,000.
And they've even put a timeline on it, which is always gutsy. The thinking is, with the reforms already in place now, the target period is sometime around the middle of 2026. Some are even getting as specific as September 2026 for when the Nifty could hit that 28,000 mark. It's ambitious for sure, but there's a logic to it.
Okay, so after looking at all these different pieces of the puzzle, let's try to tie it all together. What are the big things you should be taking away from all this?
When you boil it all down, it seems like the market is being driven by four main things. First, you have these index reshuffles that are like a sneak peek into where the economy is shifting. Second, global policy, like what the US Fed does, has an instant impact.
Third, you've got that constant tug-of-war between foreign and domestic money. And finally, strong fundamentals at home, like GST reforms and rating upgrades, are fueling a lot of this optimism.
And really, that brings us to the final big question. When you think about the power of global signals, these intense battles between institutions, and these deep economic shifts happening right here at home, it really makes you wonder who is actually in control of where the market goes next. It's this incredible, complex dance of forces, and that's exactly what makes it so fascinating to watch.